today, but most importantly, link what we have been told in the insurance scheme with what was discussed yesterday by the CVO Namibia on NAMLIDs. This is for us all. How is it possible to link the insurance scheme to the leads in order to help market access, but also service delivery within the pastoral production systems? Because without that, then most of the livestock is kept out of premium markets. So I think this is a win-win situation. Small contributions
in our region. Till now, we do not see any financial institution who is willing to take a risk to cover, these outbreaks.
Okay, thank you. Please go ahead.
My name is Julius Sopio from the International Chamber of Commerce. I have a question directed to Dr. Otieno, and it's mainly to do with the digital platform that has been set up at ZEPRI. ZEPRI is mainly providing reinsurance services, but we need to see more participation of insurance companies providing cover to the livestock sector, and to the stakeholders within the sector. Thank you.
It never really gets to the off-taker or the business. So what would be different in this particular case that would actually allow the money to multiply from the sector partner that we were working with, and they essentially only lended the 10 million, right? So that wasn't really catalytic in any way. So really curious to see what would be different about this system. Thanks.
Thank you. I think we are running out of time. I would like to invite Dr. Magersa to respond to the questions regarding insurance uptake and de-risking.
Okay, thank you for the questions. The first question is how to link the traceability and animal identification one that presented yesterday from Namibia and Botswana. I think that part is very important just to increase insurance penetration in the countries. You know, once animals are properly identified, they have identification. If they have identification number, it is easy. If they have identification number, it is easy for insurance companies to come in and insure. For index insurance, actually for the drought and weather-related one, identification is not that much required. Because the subject matter that is insured here is the forage availability, not the animal, directly the animal itself. Then whether animal is there or no, as long as the forage availability is measured properly by using satellite data, then we can provide insurance for pastoralists. But to link with credit and other financial services, animal identification is very important, because in this, if animal identification is there, then disease outbreaks, flood, drought, everything can be insured based on assessing the animal status in terms of health and other risks. For ZEPRI is, yes, a reinsurance company, but its main objective is to increase insurance penetration in Africa. This is a reinsurance company established by COMESA member countries, these are government owned company, then the major objective one is just to innovate on products that can include agriculture farmers and the pastoralists in the value and the financial inclusion, including insurance. In this regard, by using Drive, they pre-built a platform that can be easily scalable to other countries. Then for those countries, those are willing to start insurance, then the platform that Drive currently have can be easily replicated and can be implemented wherever pastoralists are. Thank you.
Thank you so much. And I think we have heard how data integration is very important. Yesterday we learned about traceability. We can feel how traceability is now also linked and could really be an appropriate model for insurance program. Dr. Otieno, please go ahead.
Yeah, thank you. Thank you so much. I have 3 questions that have been asked, fantastic questions. I'll start with the last one from the gentleman from Gatsby. What is different in this? Several things are different. Number one, you stated that the off-takers don't get the money in the system you've deployed before, but in our current tool, the online tool that I was demonstrating there, the off-taker applies directly through the tool, and therefore there's visibility. There's a track and trace. You can see where is it stuck and how much have they asked for. And secondly, KPMD jointly with the financial institution approve the request. So we can see whose approval is pending, and if there are any issues, they can be raised. And so the tool is online, and the view of the process is transparent, and that generates a lot of buying. To the question asked by Mr. Opio about the paperless, there's a whole process in terms of how our off-takers export the meat, all the way from the slaughterhouse to the processing and then the airport, and including the data lockers that have to be put into the containers and then shipping to the other countries. Most of this is still documented, but we capture those pieces of data on a weekly basis as a program. So that enables us to have real-time data. And yes, integration of the systems is a fantastic idea, and this is one of the things we are pushing through, so that when you look at the dashboard, I was just not able to demo the dashboard to you. All our off-takers have access to the dashboard, and they can see what they've been exporting in real time, what they've been buying in real time. And that tends to help out. Then when I come to Jacob's questions, thank you very much, Jacob, for your questions. The first question was about concrete data. Our program is structured such that we are in the villages that you mentioned. How have we structured it? Let me take the concept of a village. Within a village, we have the head of that village, and then you take 5, 6 villages and you put a cluster head who then coordinates those villages. And so the data comes from the head of the village to the cluster head. The cluster head then relays the information to the off-taker. The off-taker relays the information to KPMD. So there's a straight line where if there's any challenge, we know how to get to a specific village. And secondly, the second route is through the local administration. We work very closely with the village chiefs, the senior chiefs as well as the chiefs, so that if there's any information to be passed on to the local villages, it is the chief that calls the, what for the rest might not understand, but we call it a baraza, a gathering of the villagers. And therefore then the chief allows us to talk to the locals. Of course, in some places we have to go with a translator because they might not be able to understand everything being said. And therefore, a translator assists in passing the information. We also have ministry portals that have data that we get from. And then in terms of helping the communities learn more and more, there are trainings for the cluster head and the local administration that are run several times a year by each of the off-takers. This allows the local administration, when you discover the carcass weight is less than a certain number, and that viability tool can show you how carcass weight matters, I'll spend some time and probably take you through it. Then the off-taker can then adjust in the next purchase, educate the farmers on how to take care of the animals, how to make sure they're healthy, so that they get animals that give them a better carcass weight. But that's how the program runs from the measuring of the carcass. It's at the slaughterhouse that it is done. Thank you.
Thank you so much, Dr. Otieno. And I just wanted to speak on the matter of weight and measure. And yesterday, I think we listened to the presentation from ARSO. I think across the continent, we have this standard body that is working towards harmonizing these standards. And the national standard bodies, as part of the quality infrastructure, I think has significantly improved that ability to ensure that weight and measure through its meteorological departments have significantly, I think, improved. Hopefully, as we talk about cross-border trade, then some of those, as they've been harmonized, standards will be acceptable across the borders. Now, it will be a very important session. We've always talked about access to finance, access to investments, capital investments, and we would like to hear from the banks. And most of them are here. We have ABSA, we have Equity Bank, we have several other banks, KCB, we have Sterling Bank, we have Premier Bank, and I would like to invite our moderator for this session, Mr. Tito, TB. Please take the middle seat. Allow me to invite George Kaburu from Equity Bank. Lastly, I would like to invite Maulid Makoha from Premier Bank. I think we now have our panelists seated. Maulid, Tito, I will hand over the mic to you, and you can start your introduction, and then afterwards continue the discussions.
Thank you very much, Said. Good morning, everybody. Great. So I think this will be a very interesting conversation. We have the people who hold capital to deploy to the businesses that we want to grow. It's against the backdrop of a very vibrant pastoral livestock economy, a red meat value chain in Africa that is estimated at $66 billion US, set to double within the next 7 to 10 years. Yet seeing little financing going into it. And so today we'll cover the questions of what needs to happen for us to see more capital from financiers going into pastoral livestock ecosystems. So a big welcome to our panelists. I think we'll start off with some intros. Please introduce yourselves, your institutions, and tell us to what extent are you currently lending to this ecosystem, and what kind of vibrancy are you seeing in this space? George, we'll start with you.
Good morning. Engine of sustainability. We have appetite for this support as a bank. Predicate ecosystems based banking or financing. That is where we look at the entire value chain, the entire ecosystem, the entire needs that we consolidate all the needs that we have as an ecosystem, so that we can offer not a prescriptive solution, but a solution that speaks, a solution that resonates to the value chain actors, whether it is at the production segment, whether it is at the value addition segment, whether it's with the exporters of live animals, exporters of carcasses. How do we harness all these needs and come up with a solution similar to what has been demonstrated here, that instead of looking for the 18,000 or so individuals, that we can actually sit with one of the off-takers, look at these numbers, look at how we need to integrate their systems on API with the bank system, so that we can, propel this conversation. Also allow the pastoralists to leverage on the de-risking instruments that are already existing in the bank, so that then this idea of the banks do not have the data. Now we have somebody who has the data, somebody who's telling the banks, let us sit down and see how we need to leverage on this data. So to me, that has come up very strongly. That is the challenge that I've been having, or we've been having at the livestock desk, that how do we reach these masses? How do we reach these counties? How do we work with the owners of livestock? How do we leverage on this live bank? Pastoralists are the real bank. So there's a lot that we need to do along those lines to ensure that as a bank, we also walk the talk in terms of where we need to support. Thank you.
Elizabeth?
Good morning, everyone. Good morning, everyone. Great. My name is Elizabeth Wasuna, and I sit here representing Absa Bank from Kenya. The experience I've had is over 30 years in this industry, with the majority of it being in business banking that has been hosting agriculture from a bank perspective. Today, I sit here under the title of a strategic partner director, really looking for partners to be able to enable Absa Bank really be able to go beyond what it has already done. We have a history of over 100 years in the continent as a Pan-African bank. I say that because, as we sit and, look through the proposition and the struggles that we have as a bank, we do know we can't roll propositions that are effective and efficient alone. And so the conversation, and I know I've been approaching a lot of you in the room, is to find out how do we consistently walk the journey together. A proposition that was launched 10 years ago isn't fit for purpose in today's environment with all the changes that are taking place. Whether it is COVID, whether it is, structural issues from, geopolitics and so on and so forth. So I say that because our ambition, our purpose as a bank is to empower Africa's tomorrow together, one story at a time. And again, it really speaks around the partnership piece. So from a strategic perspective, Absa Bank over the last 5 years has increasingly focused on agriculture, livestock, and pastoral farming. But even as we gravitate more towards pastoral farming, we've realized that there are linkages between livestock farming and pastoral farming, but yet there are some very unique elements that we must address in the pastoral farming. And I know a lot of them have been spoken today, a lot of information that I've been able to gather so that we can together be able to land a proposition that really speaks to what is required. But I think one of the key things that I've picked out from these conversations, which is something that we believe as ABSA we have great strength in, is the proposition must suit the people, that the pastoralists that are on the ground. We have always spoken about financing from a very conventional perspective, but more and more we're hearing the conversation gravitating towards a Sharia compliant facility, how able to get more information. I know we've spoken to George and the team, Strathmore in the team. I've had a chance to speak to some of the people from IFC. There's a lot that we can together be able to do. And as we sit here as partners, as banks, one of the things is that we're not in competition. We're not in across the African continent is huge. And together we want to be able to come out here saying it's huge. And together we want to be able to come out here saying that we together have been able to impact in the areas that we find ourselves having great opportunity or great strengths. So thank you very much and looking forward to the conversation. Thank you.
Thanks, Elizabeth. Jamal.
Okay, so good morning, ladies and gentlemen. My name is Jamal Rashid. I sit here representing KCB Bank. Tito, I don't know if it was intentional that you had Equity Hubs and KCB sit together, but I represent the bank in capacity of product development, specifically dealing with Sharia compliant products and agricultural products. And similar to my colleagues from both Equity and ABSA, I think when you look at us as commercial banks, we read from a very similar strategy playbook. Agriculture is what I would call central to execution of that particular strategy. And for us at KCB, how we are actually tackling this is on two fronts. Firstly being through our agribusiness arm of the bank, where we're offering a wide array of products and services that target the entire value chain, from producers to aggregators, all the way down to the retailers at the very end of the line. And then secondly, we're also trying to engage communities through KCB Foundation. So with KCB Foundation, what we've done is we've launched a series of programs, specifically the Tujiajiri program that is targeted at women and youth. We also have Flame that deals with female-led and managed enterprises that also targets women and youth within this and enable that flow of commercial finance to finally start moving in that particular space. So those are my expectations, and thank you once again.
Thanks, Jamal. Dr. Joshua.
Good morning, ladies and gentlemen. My name is Joshua Zira from Sterling Bank in Nigeria. I work on the agricultural desk and solid mineral financing. I head the northern region in Nigeria. And one thing in Sterling Bank is the belief in the sector agriculture. And in Sterling, again, one thing we've done in funding this sector, we look at how the sector is and what can we do as a bank. One of the things we look at is we considered a lot of things, and if you remember Maputo Declaration 2003, where it's been said every nation, your budgetary allocation, about 10% should actually go to agriculture. And I don't know how many percentages of that happens in different nations, but as a bank, we've done over 18% of our total loan book as a bank to the agricultural space. And one thing we do, like every other person has said, actually, is to look at ecosystem financing, and we finance the entire value chain, looking at of course, pre-upstream, the upstream, the midstream, and the downstream. This is talking about every actor within the agricultural value chain, now specific to livestock. We look at those people who are service providers, input suppliers, and then we look at the main producers. Now, in this space, if we look at it, a lot of things that happen in this space actually has to do with those at the bottom of the pyramid, the smallholder pastoralists and the smallholder farmers. How can you actually work with them? They are the ones supplying what you as a processor, that's if you want to add value addition, they are the major people supplying you the feedstock. How can we bring them into the financial system? And we look at various schemes within, and we work with these people. Like I was saying yesterday, so what we do is to make sure that we cluster them and then make sure they are well aggregated. So when they are well aggregated, why do we do that? So that they can have a guarantee offtake, because once they are aggregated, there is an offtaker who is a processor that can actually offtake from them. And what we do, we ensure that, let there be some kind of agreement that you sign, that at the end of this, if I'm raising maybe either a cow, sheep, or goat. If I'm, of course, fattening them for you, whether for 60 days, 90 days, at the end of this period, you should be able to offtake it in their numbers, feed your factory, and then process them. So we do that, and that gave us a leverage to get these smallholder farmers into the financial sector. And another thing we do as a bank again is to ensure that we collaborate with DFIs to see how we can actually catalyze funding into the sector. One thing you look at is every other bank on their, of course, we in Nigeria, on our balance sheet, it becomes so difficult to lend to the sector because of the high cost of the fund. And what do? We look at those areas where we can actually blend this funding to, bring down the interest rate so that people can actually access it. And one thing with funding in this sector again is to be sure that the funding, is it available? And if the fund is available, is it accessible? Yes, it's accessible. But if it is accessible, is it affordable? Can the farmers afford it? How can you make them to now afford this funding? And I heard people talking about collateral. Yes, the banks look for collateral, but definitely there are programs we do, especially when it comes to financial inclusion and innovations, where we have specific programs for women and youth. We've done that some years back, and we are still doing it with some development organization. And we received that funding, that kind of funding, we call it a matching fund. The fund was given to the bank at 0%, and they said, bank, lend it at single digit. And it has to be for women and youths. And this is another innovation I think we can come up with here, something that will specifically bring these people. Why are we emphasizing women and youth? They are the most vulnerable in the society, and they don't have collateral. So what do? We ensure that, okay, we blend this funding, and we layer some guarantee. NISAL is here, we work with them. Their credit risk guarantee that we are talking about, up to 75%, and some other guarantee providers. And we look at other people again who are like, okay, we can actually produce some certain guarantees to these people. And then we work with other partners that are actually providing capacity building in terms of profiling these farmers, ensuring that they are well capacitated to be able to, get, at least be bankable. And the next thing is we, as a bank, Sterling Bank, we are Sterling Hold Core. Sterling Hold Core. So we have another bank, like my friend has said, that are Sharia compliant. We call it alternative bank. So we have Islamic Bank as a part of the group of Sterling Bank that we deal with halal products. And we are working with different halal abattoirs in Nigeria and halal products, bringing these people into the financial system. So I'm happy to be here, and I look forward to a robust conversation. Thank you.
Thank you, able moderator. Ladies and gentlemen, good morning. I am Nasir Usman by name, a livestock value chain specialist at NISAL. NISAL is an acronym for the Nigerian Incentive-Based Risk Sharing System for Agricultural Lending. We are a non-bank financial institution owned by Central Bank of Nigeria with a mandate of de-risking agriculture and facilitating agribusiness. And when we look at the agri-space, over time there are so many, we have banks, many banks here with us, they don't want to lend into the agricultural space because of the risks involved. So our own mandate as NISAL is to do risks and facilitate agribusiness by redefining, measuring and sharing agribusiness risks, and as well by fixing the agricultural value chain, and also to stimulate the flow of finance and investment into the agricultural sector. Over time, we have done a lot. But for the purpose of this, when we have NAMLIT, Ethiopian leads, and the Botswana making presentations on livestock identification and traceability system. Yes, in Nigeria, we have a ministry, Federal Ministry of Livestock Development, which has that national mandate for the traceability system. But as an institution, we developed and launched what we called the NISAL Livestock Identification and Monitoring System. What does it may be a bit different from the other concepts, but what we did is a technology enabling system where each obligo or intended investor that want to invest into livestock, that NISAL will guarantee or facilitate financing and provide guarantee for such must subscribe to that. Over time, we understand that we all know livestock is a movable asset. And for the financiers, for the financial institutions and the investors, they want to follow their money. They want to see at every point in time where their money is and how their money is being used. So in that platform, the monitoring system allows us to do three major things. One, we use what we call the geofencing mechanism. In the geofencing mechanism, as we are sitting here, I can't, even though I cannot project, I can make presentations or a demo presentations of some of our subscribers down there in Nigeria, the farms that we have is under NISAL facilitation as agribusiness livestock finance facilitation, for us to be able to see the number of animals that we facilitate to one or two of the animals. The investor, at every point in time, at the comfort of his own zone, can also log into the portal and now see. And one major thing is agribusiness. In agribusiness, currently, in collaboration with the Federal Ministry of Humanitarian Affairs, we are deploying this model to facilitate finance for 20,000 women and youth in goats farming, in goats production across Nigeria. We have gone far. We have to implement before the year's round up. Let me not talk much of the time. To your questions, the perspective of livestock production, pastoral livestock production, economic vibrancy and trade ecosystem in Nigeria. Nigeria is similar to most of the African countries. Livestock is one of our major important agricultural subsector, contributing over 25% of agricultural GDP and up to 5% of the national GDP, as well supporting over 20 million livelihoods. Based on the recent statistics we have from our Nigerian Bureau of Statistics, in collaboration with the World Bank and FAO, Nigeria holds 55 million heads of cattle, 65 million sheep, and 130 heads of cattle, 65 million sheep, and 139 million goats. And not really, unfortunately, is similar to all African nations. Over 90% of these resources are in the hand of pastoralists. And Nigeria, as we all know, is the 5th most populated country globally currently, and the leading populated country in Africa, with nearly 300 million people. So we have so many mouths to feed. And this population is projected to exceed 400 million by 2050. So when we look at all these scenarios, all these economic values, in NISAL, we make pastoral livestock a strategic priority, not merely a livelihood style. We look at it as an investable value chain with proper and appropriate risking mechanisms and market interventions models. Finally, for this very round, we all know with the rise and the increase in populations, the demand for animal and animal product will certainly increase. Currently in Nigeria, one of our representative, I think yesterday from ECOWAS, made mention that Nigeria currently import over milk requirement value at over $2 million annually. So this, it means the opportunities are.
As much as this is an introduction, and actually, from what I've just learned from the previous speakers, they have had a good experience and they have had a good experience and input. But from my side, and actually from our bank side, let me say clearly that the today's session and the whole program is a learning session for Premier Bank, because actually we currently don't have any specific product that is linked to the pastoral livestock market. Therefore, I won't narrate what my previous speakers have just said. There are products that they have launched for this sector. Let me briefly say that due to the narratives that have been in the market about different risks that are linked to the pastoral livestock market, up to this time, we don't have any product for that. But alhamdulillah, we intentionally decided to attend this forum so that we take it as a learning time to see from our peers what they are doing, from Equity, from KCB, and other financial institutions across Africa. So I will say that actually looking forward to a very interactive session, a learning session for our institution, so that we see what we are not doing that our peers are not doing, so that we can also pick up from that. So I'll take back to our moderator, and thank you very much.
Thank you, Mauli. The failure of a deal actually being struck between you and a prospective borrower.
So thanks, Tito. When like who owns the animals, what is the market like, what is the production cycle, so that I'm also able evident either on mobile networks or on the banks. But we sure know that the business is generating money. We have instances of barter trade. We exchange a truck with some animals. So as a banker, I also want to extract that raw information, which is also not available from the networks, but at least we can have an agreement. We can have evidence of a logbook or a certain document that can evidence of a logbook or a certain document that I can also table to the bank when we are discussing on risk mitigation, and see that ideally we don't have the financials that we would expect, but we are doing something on the pastoral side to ensure that we still make the right decisions that are sensitive, to the business, to the pastoralist. And at the end of the day, we want to offer solutions. So we want to offer solutions. So sales data may be lacking, banking transactions may be lacking, husbandry data, when did you treat your animals last, what was the mortality. I appreciate that now we have a database that all this information can be extracted, but at the farm level, sometimes this information is lacking. Sometimes when you look at off-taker agreements, other than those who work under specific off-takers, sometimes you find we have brokers and other traders. At the middle. So sometimes that is also lacking. The space of youth and women, when you look at the ownership of livestock with the pastoral community. Yes.
Sorry, you won't get that kind of caliber of businesses often. how do you think as a bank you can tailor to the way things are on the ground and tailor to the governance structure and other kind of structures within these businesses that operate in the ecosystem?
Thank you very much, teacher, for that question. As I mentioned earlier, Absa Bank has been in the continent for over 100 years, previously known as Barclays Bank. The experience we have in dealing with corporate clients, business banking, and today with SMEs is large. One of the things, or create, propositions that make sense to them. One of the key things that we have done over the last couple of years is that one in the room, KRA in the room, Kenya Revenue Authority, other big bodies that influence how we interact, then we lose an opportunity. So one of the biggest things that we have changed is not waiting for the clients to come to us, it's us going to the clients and making sure we have open and honest conversations in the language that they understand so that we can both be able to understand each other when we co-create our propositions moving forward.
Thank you very much. Jamal, KCB's Mifugo ni Mali program has kind of reached out to actually pastoralists and is now banking them and offering lending to them. What have you learned that you can share with those in the room about what it takes to actually scale lending to pastoralists and businesses within that ecosystem?
Okay, thanks, Tito. So for us, like I mentioned, we've been approaching this space from two angles. On one side, we have the products and services that we've sort of co-created for the actors in this particular space. And then on the other side, we have the community engagement. And when I look at our portfolio as KCB Bank, it's largely driven by the community engagement that we are doing through the Mifugo ni Mali program. So when you look at this particular program, we've built it on three key pillars. The first is capacity building, where we're now trying to basically just engage the various farmers, whether it's dairy farmers, beekeepers, fisheries, etc., in best practices in terms of animal husbandry and production. Okay. And then secondly, from that, we move to access to inputs and services. So we're trying to make inputs such as veterinary services, feeds, a bit more accessible for them. And then thirdly, we do the market linkages, okay? So on that front, we've had success with certain areas in the agribusiness space, and in other areas it's been a learning curve. Specifically for the pastoral markets now, when we zoom into them, what we've come to discover is that it's a very sophisticated or complicated production system that largely has issues of mobility and resilience. There's issues of seasonal grazing and the kind of inputs that they get. And then how now that overall translates to the full value chain for us as KCB. So for us to be able to translate this into like a commercially viable lending space, there are three things that we need to demystify as banks, okay? Firstly, there's the issue of this sector being considered high risk. I would say it's not high risk from where I sit. I would say we don't have risk visibility, okay? So as banks, we're usually comfortable financing areas where we can see production history, we can see market access, and we can predict cash flows. I feel for this particular pastoralist sector, there's a gap in that, or there's a lack of visibility into that. If we can solve for that, then the space becomes a bit more attractive for us as commercial institutions. Secondly, there's the issue of collateral. Yes, collateral matters, but for us as banks, we're not in the business of repossessing collateral. And even when we do, it's very labor intensive and very resource intensive to dispose of these same collaterals. So when we ask for collateral, in essence, what we are actually saying as banks is that we need visibility into your banking history. We want to see your previous livestock sales. We want to see projected cash flows. So again, it comes back to the data. So the collateral is more of a stopgap measure, but not really our key point of interest. And then thirdly, one other area we would really want to demystify is for us as banks, we would want to approach the pastoralist market or the pastoralist ecosystem similar to how we're approaching other agribusiness ecosystems. So the idea is not to finance pastoralists one household at a time, but rather if we can finance them through market structures. And I'm really glad we've had the conversations that have been going on in this room, because if we're able to have these market structures in place where we have livestock market associations, we have cooperatives, we have the feed suppliers, and we have the digital marketplaces, then the space starts becoming more and more attractive. In a nutshell, what I'll say is once these markets become organized, transparent, and digitally visible, then you wouldn't need to convince us as banks to come on board. We would actually be the ones chasing after this particular segment. Yeah, thank you.
Thanks. So ecosystem kind of based financing is what you're also looking to do. Okay, great. Dr. Joshua, I was really impressed. 18% of your portfolio going to agriculture.
Do you have the knowledge of what you want to do? Secondly, we look at grow organically in your borrowing. And of course, lastly, we don't fund you when you are speculating the market. First of all, we want to see your guaranteed market. And then lastly, when we see that you have route to market, we can now begin to talk about financing, and we ask you all the documents we need. Now, those models that have worked, especially the ecosystem financing, that's what we're in, and ensuring that this guy offtakes. Now, what do? You, as a goat farmer, you need those that will supply you goat. We make sure the fund goes directly to your suppliers. Now, for feed, maybe you are buying fodder. Who are those supplying you the fodder? We don't give you the loan directly. We pay those people so that they supply, and we ensure it's supply. So that, because this is to prevent diversion of funds and other things. And that helps us. So once we are done with that, we now go to the off-taker. The off-taker and all these stakeholders must be my customers. Because you as an off-taker, if you don't have the funding, the capacity to off-take, and we know your capacity, we fund you to off-take. And then you do your business so that everything revolves within. So by blending, we make sure DFIs that we are working with, they will give us their funding, and of course at a discounted rate, and that reduces our cost as a commercial bank that will blend both commercial and DFI funds together. And then we work with those people that provide that risk guarantee that I said. So they de-risk and reduce the cost of the fund again. So for smallholder farmers, we don't ask you to bring tangible collateral. It's for large corporates. Because we are established and you're a large corporate, we ask you to give us collateral. But for smallholder farmers, youth and women, you may not have any landed property or that has title to give us, but we leverage on those things to see that we fund you. So that's what has worked. And another thing we did is to ensure that we digitize some of our products. We automate it for, so that we can actually do it in such a way that farmers can actually get their request approved on time. Timely approval is very key because agriculture generally is seasonal and is a timely thing. If you actually, if you don't give that at the required time, you are planning for a failed loan and you are rooting forward for a kind of a defaulted loan. So we try to make sure that as we are financing you, we make sure you get your facility at the time required, and then you'll be able to apply it. And we make sure, again, that farmers apply and adhere to all the good agronomic practices. Because you discover some farmers, they may not adhere to such, and they have issues in getting the output. You can imagine a farmer will tell you, okay, if I have a cow at 200 kg today, within 90 days, I should be able to raise it to maybe 350 kg. And now there are some feeding regimen that he needs to adhere to. But if he misses such, in the agreement, the off-taker say at 350 kg, I will off-take at 90 days. And within 90 days, he is unable to achieve that 350 kg. What do? So you ensure you stay close to the customer because, of course, close monitoring is one of the major things that help us to achieve where we are today. Thank you.
Thank you. Usman, again, it was interesting to hear you mention the other de-risking mechanisms that you have, basically these digital platforms that allow, for example, I think the one that really struck me was the collateralization of cattle and using RFID tags to give assurance that these cattle are where they're meant to be, and an alert even if those cattle move outside the boundaries. What has been the uptake of that amongst financial institutions, and is it actually leading to more finance flowing into the ecosystem?
Thank you once again. As I said earlier, NISAL is a non-bank financial institution, and I think it's not coincidental, but it was a deliberate strategy to be within financial institutions because we give them comfort and guarantee to lend into the agri space. Yes, of course, we understand that no single de-risking tool is sufficient to investors and the financial institutions. And our primary de-risking tool is a credit risk guarantee that we offer up to 75% across the value chain, depending on the segment of the value chain. And one interesting thing is we incentivize also the obligors that are in good standing with interest drawback of up to 40%. But of course, we know there are certain conditions that you need to fulfill before you qualify. One of it is the innovative insurance, livestock insurance product. Basically, we are using two insurance products. The index-based livestock insurance product by Rex Insurance Company in Nigeria and Litway. And we have also the subsidized livestock and fisheries insurance product by the government institution. And also, most importantly, you can continue feeding them, but invariably, you are reducing your return on investment. You are eating most part of your investment. So committed offtake agreement is essential. And as well as I said, the last thing is the control environment. We need to know where those animals will be fattened or will be produced, where and how they can't. So that is why we used this digital platform. And with that, currently we are having a number of expression of interest to subscribe to this because of the transparency and clarity of the process. As an investor in the dashboard, you can't. Anywhere in the world, you can assess the facility and the animals. As a financier, you can as well assess the animals. And for the farm operators as well, you can even get some parameters, health parameters that will indicate to you, yes, this animal is healthy, needs some isolation, needs to be treated. Thank you.
Thank you. Ladies and gentlemen, I know we've taken a lot more time. Just a final question to Maulid. Thank you very much for your honesty on the understanding of your institution with regards to pastoral livestock lending. Maybe just from what has been discussed in this panel so far, what are you taking back and what changes are you going to adopt within Premier Bank to capture this opportunity?
Yeah, thank you very much, Tito. Just like I said from the start, with regards to our bank, Premier Bank, this is a very great opportunity for us. Personally, I will start by saying, number one, the narrative that has been that has been being said throughout the history that pastoral markets are so risky. Today, I have experienced it, and actually not today, throughout the presentations that we have, I have seen. Actually, it is the opposite of what that narrative goes. The the market is well organized. From what I've seen actually today from the presentation by the Strathmore team, that one only, to me, is a takeaway that actually will give my bank the ability now to engage other related partners so that we structure these products now within our risk appetite. Thank you very much.
Thank you very much. I think I will hand it over to Said. We are much over time. But I think if there are questions to the panelists, they will be with us throughout the day and I think going into tomorrow. So please reach out to them and ask them whatever questions you may have to them.
Thank you, Tito, and the panelists. Please come forward for a photo group. Our cameraman, South Africa, from Nigeria, from East and Central Africa. I mean, we really need this kind of solutions. I think over time we have always talked and
Okay. Good. Okay. Hello. Hello, hello. Could we take our seats, please? Let's take our seats so that we can get instructions. Okay, welcome back. We want to move now to the parallel sessions where we'll be looking at different aspects. There are those who will be looking at the investment and finance aspect, and those who will be dealing with the policy. What we have organized is that for those who are dealing with investment and finance, you will walk out this way, then take a left turn. There's a boardroom at the end there. The people who will be moving to the boardroom, Said Ali will come and announce them so that we can see who are going there. For the rest who are dealing with policy and legislation, we will remain here for the session that we are going to have. So let me invite Said Ali to get hold of his group so that they can move together to the boardroom on the other side. So welcome. We will be having these two parallel sessions, but we'll be converging later on in terms of our discussions as we proceed. And as you can see, tomorrow is a very heavy day also because we have quite some significant presence of dignitaries. So we really want to have something that we can give them when they come to join us. So Said Ali, please welcome.
So thank you so much again. I think we still have some people who have not yet maybe taken their breakfast and are still awake. So we are having two sessions, and I just wanted to ask a question. How many of us have ever watched a TV series called The Shark Tank? Many of us, right? That's where we are going to in the next few minutes. We have always spoken about livestock sector. We're always talking about investments. We have talked about young entrepreneurs. We have seen existing businesses that require additional capital, that require technical assistance. So we're going to have a breakout session in the room right there, and I'll guide you. We are going to have business entities that are going to present their business cases. We will listen to them. They'll be presenting to development partners, they'll be presenting to the banks, they'll be presenting to other experts, and we are hoping that there'll be a deal, between the parties. And it will all depend with the value proposition, particularly from the enterprises. And we have some enterprises, I'll just name them by So we have ABF United, we have ABIS Group, we have Al Nahel, and then in the afternoon we have in several others. We have Genco, we have Livemo, we have Luna, we have Sole, and then we have RIS from Tanzania. So all those companies will be presenting their business cases, and we do hope that there will be a deal afterwards. So to get started, if I call your name, I would like to request you to go to the other end of that room. Be seated there. You'll be shown by my colleague, and then afterwards we'll be inviting one of the business enterprises. So to start with, Amadou Traore of AFDB, you'll be with us on that end. There'll be a boardroom on that side. Evans Kamau, IFC, you'll be joining us there. We have Hayati Rothore, World Bank, will be joining us too. Thank you. Then we have Julius Rono of SNV, Kenya and Burundi. Then we have Julius Opio of ICC. Then we have George Kaburu of Equity. We have Jamal Rashid of KCB. Elizabeth Wasuna of APSA. Then we have Tom Osebe, Gate Foundation. Obaye Khalifa, Gate Foundation. William Salih, IBAR. John Opong, IBAR. Eric Galela and Mohammed Eidle, both from IBAR. We do hope also the EU and the BMZ will also be joining us later on. So please, if you had your name, I'd like to request you to step out and go to that room. I'll now invite my colleague to come and continue the presentation here.
Okay, let's give a chance for our colleagues who are going to the boardroom to move on to the boardroom. And then we want to go. I'm not sure whether your presentation is there, Professor Ahmed. Is your presentation there? Because if it's not, then we have to present it from here. Okay, as the presentation is being prepared, we may as well start on the preliminaries for this session. As we said, this particular session is on focusing on policy and policy issues and legislations as well. So we want to really zero in on some of the issues that are there. But we thought before we did that, or before we do that, we could take you through something about the Kampala CADIP and the current situation as it is since Kampala Declaration came into effect. So this is what we wanted APMD to do so that we can be together in terms of what is contained in the Kampala CADIP and its implications for for the livestock sector. So what we want to do now is really to have that presentation, and then we can get into the other perspectives. What we have planned to do is that during the other sessions that we were having, we were taking note of some of the policy and policy issues, and we are going to look at them as we proceed. But again, we'll open it up to plenary so that we can pick out some of the issues that have not been addressed in the categories that we have. So from yesterday's session, in session 5 yesterday, we started talking about the policy issues. And if you can recall, like I mentioned early this morning, Masico did indicate a few of the constraints and the policy actions that had been taken. And we also looked at the African Continental Free Trade Area with the aspect that it takes, especially in terms of the need for harmonization and so on. So we want to bring those things together so that we can actually zero in on the policy constraints that we're having, or the constraints that we're having, the policy measures that we need to adopt, and so that we can come out with something that is a little bit more concrete, something that we can present, especially tomorrow when the dignitaries will be here. We hope to have some ministers with us and government representatives, senior government representatives, especially the policy decision makers. So we would want a situation where we capture some of those issues that we think should be addressed at that level as we move forward. Because as it is, we really would wish to come out of this session with some very concrete proposals in terms of what needs to be done, and actually make sure that we are on the way towards implementing some of those issues, or at least governments listening to what those issues are. So this is what we want to do this morning. Yeah. Are we okay? Okay. Yeah, so the presentation is ready? Okay. Yeah, if it's ready, then we'll proceed. Professor Ahmed will take us through that one, and then we can get into the policy issues as it is. Like I've said, we have consolidated a few of them. We will take us through them, and then we can see if we can add them and also look at prioritizing them. So welcome.
Thank you very much. Thank you. Thank you. Okay, good morning, everyone. Okay, I would like, before we start, at the beginning of our discussion on the policy, I would like to start with the Continental Framework of Policy and Development, which is CADAP, Comprehensive Africa Agriculture Development Program, and how we can align that to the pastoral livestock sector to support that transformation, because we all, all the subsector, if we call it like horticulture, agriculture, livestock, pastoral livestock, aquaculture, all the subsectors should be included under this program. So my presentation is composed of 5 sections. First, I will talk about the CADAP result framework generally. Then what is the main 3 operational components that we need to look at thinking about the pastoral livestock sector? Then how far IBAR has been supporting the operationalization of the pastoral livestock sector and the CADAP program. For pastoral livestock alignment process, I'll summarize, how the concept of alignment, and finally, what is the expected impact. So the CADAP program, it is Kampala CADAP program. Actually, this is the 3rd cycle. This Kampala CADAP program is for 10 years action plan, strategy and action plan, starting from 2026 this year until 2035, with the vision of sustainable and resilient agri-food system for a healthy and prosperous Africa. For sure, it has been already adopted by heads of member state in 2025, but it is really implementation will start 2026 this year. That's why we have started already operationalization of different subsector. It is outlines 6 strategic objectives, and I'd like you, when you are looking at this, think through the pastoral livestock lenses, because everything here is very applicable. The strategic objectives intensify sustainable food production, agro-industrialization, and trade. That's what we need for our sector. Boost investment finance for accelerated agri-food system transformation. We have been talking about investment, bankable programs, investable intervention, all that. 3, ensure food nutrition security, and that's what we need for our pastoralists. 4, advance inclusivity, equitable livelihoods. Again, that's what we need. We talk about youth, women, vulnerable groups, etc., and livelihood for them. Build resilience. We have been talking about drought, disease, outbreaks. All these negatively affected the resilience. So this also talk to our sector. It has also 22 targets. You can think like objective, because every country has their own strategy for development of the sector, either the livestock sector or pastoral sector particularly. So it has its own objective, it has its own M&E framework with indicators, etc. So those are the 22 targets for the grouped by the strategic objective. We can look at it again from the lenses of pastoral livestock. Increase agri-food output by 45%. Reduce post-harvest loss by 50%. I'm not reading all of them, but I'm just highlighted some of them who are very relevant to to our forum and what the points we are discussing. Triple intra-Africa agri-food trade that we're talking about, For objective number 2, it has mobilized $100 billion dollar investment in agri-food. Maintain more than 10% of public expenditure commitment for agri-food systems. Objective 3, achieve zero hunger. We know we have this cycle of drought, etc. So we need to achieve, reduce child stunting and child wasting and child overweight by 25. Raise the share of people who can afford healthy diet to 60%. Objective 4, reduce extreme poverty by 50%, reduce the gender yield gap between men and women by 50%, empower 30% of women, 30% of youth, vulnerable groups in agri-food value chain. So you can see there, when you look at them through the pastoral livestock lenses, you can see it's very aligned. Objective 5, at least 30% of agricultural land under sustainable land management. So now we're talking about rangeland management, restoration, pastoral management, water management, all the resources, not only agriculture. 40% of household protected from shocks. We talk again about this. This has 22 indicators. One indicator speaks to each target only. I'm not reading all of them, but maybe I will just refer to the first one for the production, industrialization, and trade. Agri-food output index, this is the indicator. I talk to the increase of 45% of agri-food output. Post-harvest loss talks to the 50% loss. Inter-African agri-food trade value, agro-processing share of agri-food GDP. You will have the presentation, so we will look at everything. So what is the advantage of this declaration? Actually, it has been developed based on lesson learned from the 2 other declaration, Mobutu. So holistic agri-food system. This is one. I'm not reading the left part. I look only at the advantages. Holistic agri-food system. We are not talking about now agriculture only, or livestock only, or whatever. We are talking about agri-food system. For investment, this one commit 10% of public expenditure, $100 billion by 2035, and 50% of agri-food GDP. So you can see investment is very highlighted in this declaration. It is also more simple, because In Malabo declaration, we used to use 59 indicators. Here we have only 22 target with 22 indicators can be used for the whole sector. Also for the policy, everything is there, like strategy, declaration, strategy, action plan, guidelines development already before the rollout. Inclusivity, because in this declaration, the mandated equity targets, as we talk about, have the gender yield gap, empower women, youth, and vulnerable groups. So it is very inclusive. The second part in my presentation, I talk about the main three components that we need to look at. It is not only three, but I select the main three that we need to think about for the operationalization in pastoral livestock. The first part is result framework indicators, the indicator, because this is our instrument. Because again, I don't want to criticize anything, but before, the focus was more on the reporting. But here, as we are starting, we are thinking about really investable, bankable program that make difference, make improvement, make transformations. So that's why we need indicators, very important, because to assess the current situation, the baseline situation, and then the progress every 2 years until the end of the 10 years. So indicator is very important because it's for the continental accountability, because the 22 and also countries still have the right and flexibility to track other, but those at least those 22 should be included. For investment planning, which is National Agri-Food System Investment Plan and Regional Agri-Food System Investment Plan for the regional economic communities. So this is investment translation. Updated Agri-Food System Investment Plan, including for sure the pastoral investment, pastoral livestock system, and convert priorities into costed, bankable programs and financing pipelines. And the third part is the reporting, which is the biennial review and the joint sector review. And this talk to the mutual accountability, whereas biennial review will link countries to African Union commitment, while joint sector review creates national learning and corrective action during the implementation process. AOI bar effort in operationalizing this result framework. This is the third part. Actually, IBAR has started already supporting member state in developing and validation of 22 pastoral livestock sector improvement indicators. We call them LSI2, Livestock Sector Improvement Indicator, and also operationalizing the Kampala-Kadab result framework for pastoral livestock sector. And this process included our involved 10 countries, 2 from each region, 2 from North, 2 from East region, Central, West, and South, that who are mainly based on pastoral sector. And this also includes 4 regional economic community, 3 African Union institution, and 3 technical partners, plus the livestock expert and private sector representatives. And the purpose of that is to domesticate Kampala regional framework in pastoral livestock system through strategic alignment. I will explain what does mean strategic alignment, indicator operationalization, investment planning, and institutional integration. So the methodology is that IBAR started assessing the readiness and the baseline of the member state, like what is the actual livestock policy landscape available already now. We are not what is the domestication status of National Agriculture Investment Plan? This is the planning framework in the Malabo one, and reporting readiness, like what kind of data is available and how far is are those countries are ready for reporting. Then we also supported livestock Kampala alignment metrics. As I said, every country has its own strategy for the sector with an objective, M&E framework, everything. So we align now what is in the member states with what is the CADAM has, because we need to emphasize the what's it call it, the ownership and compatibility. We are not coming to tell you what to do. No, we are coming to now support you to align or to align what you have with the Kampala Declaration. So we linked livestock priorities because this is the objectives or the targets, intervention, which is the implementation project in our language and the national level, 6 objective of their strategy, and determined targets. Again, this is speak to the national level. Priority intervention selection, also we help them to select focused, high impact intervention linked to regional, the framework indicators. And this should be, again, selected according to be investable, bankable, interventions. Also, we assess the indicator data readiness. I mean, we help the member state to assess their data and the readiness sheet. So to define what is the definition, the baseline, availability, the data source, frequency, and responsible institution of data collection that will inform the indicators and the biennial review. And finally, we support them to assess their readiness to transit from NAIB to NASIB, from National Agricultural Investment Plan to National Agri-Food System Investment Plan, and also the biennial review and joint sector review. The key output produced is livestock Kampala alignment matrix, as I talk about alignment, indicator operationalization sheet, NASIB transition checklist for each country, biennial review and joint sector review integration action plan, 18 months roadmap for full operationalization until the first biennial review, and direct support framework. The third part I would like to talk about alignment logic, how we align this and how this is informing what we are doing here now. So we have 5 steps. The first step is pastoral market problems. We all discussed the pastoral market problems, So poor aggregation, feed gaps, disease, losses, drought, So this identified already. Kampala Reserve Framework target link has been already done for 10 member states and need to be scaled. Livestock indicator profile. Again, we define pastoral livestock indicator, disaggregation, how we can take this to disaggregate to pastoral livestock, what is the baseline and data source, etc. So this also done for 10 member state and needs scale. NASIB investment package. This is now a priority to support member state in, because the development of a cost and investable programs, project, rules, finance, and timeline. This is what we need to help member state. Also, the biennial review and the reporting. Biennial review or joint sector review, evidence narrative. This the reporting readiness, the gaps, and corrective policy action. We need to support them to include their data into the reporting, analysis reporting, and every 2 years we look at if we need to have any corrective policy action. So this is an illustrative example I would like to share with you about the alignment between the intervention we have been talking this week, 5 days, with the strategic objectives. So the strategic objective number 1 about production, trade, industrialization, it talks very clear to feed fodder banks. This is I'm talking about now intervention we have been talking about. Irrigation centers, grading system, cold chain, SCBS certification, corridor markets, because all those speak to this result area. For investment, strategic objective. Bankable feedlot, dairy, meat, hide and skins, and animal health investment packages. For nutrition, affordable milk, meat supply, school feeding and nutrition sensitive animal source food. For inclusion, women, youth, enterprises, access to capitals, we talk about. Pastoral cooperative, Dr. Chuma was here, even he talked about that. Market inclusion, etc. So all that is talk very clearly to the strategic objective. Resilience, rangeland management, water management, drought early warning, water points, mobility corridor, insurance, all that talk to the resilience. Governance, the governance is mainly linked to data, livestock data hub, traceability, joint sector review and biennial review, livestock agenda, and cross-border coordination. So I would like to comment on this, the process of Nasib, and Dr. Gamba here can even support me because he already was leading the development of Kenya Nasib. So the steps, we define investment themes, we prepare business case, we cost and the package. This business case is translated into now program, costed and package program, mobilize finance, and track implementation. Those are the steps of the Nasib development and then the implementation. So let us look at it through, again, the pastoral livestock lenses. Define investment themes, already defined. We talk about aggregation, feedlot, fodder, feed, animal health services, cold chain, all that is there. Prepare business case. So we need to use evidence on demand, value addition, losses. We have this information. Trade flows, jobs, resilience, etc. Cost and the package. Now we need to transfer this business case into investment package. So clarify the public-private investment, who is doing what, who is covering what. Blended finance, recurrent costs, etc. If we can have recurrent cost system. Then mobilizing finance. We have to engage treasury office and the bankers, investor, donors, because this package should include all sort of finance. Every finance source has its own rule in this. And then lastly is track implementation, motor using Kampala indicators, national output, and GSR corrective action. The fifth part, which is the last part now, what we expect from if we manage to align that and operationalize it in pastoral livestock, visibility, because pastoral livestock and pastoral system become visible. They will be there to be monitored on both national, regional, and even continental level. AU using become visible in national pathways, AU indicators, and biennial review, joint sector review reporting or narrative. The investment. Pastoral market priorities become costed, bankable through the National Agri-Food System investment plan program rather than isolated activities. We'll have a handbook. That's what exactly mean. That I was saying that then when our donors coming to help us, they have this catalog. They can select what exactly they can help us in. Trade and value addition, improve aggregation, feedlotting, SBS, cold chain. So, you know, the infrastructure itself and the system will be improved. Resilience, including feed, water, rangeland, health, all this will be improved or enhanced. Inclusion, women, youth, pastoral communities, all then will be stronger, has stronger role in value chain, in the governance, in the benefits. And lastly, accountability, because we'll be having the data, the real data. And think about the 22 indicators, they cover almost everything. So we have the data, we have the dashboard, even this will be linked to, could be linked to the data hub of the ABMD. And review platform, enable evidence-based adaptation. And finally, my last comment is the pastoral livestock market transformation becomes scalable when it is visible, national plans, financed through investment packages, and tracked through CADA result indicator. Thank you very much.
Okay, thank you, Ahmed, for that introduction. What I'm not sure is whether we have taken you off track or whether you are still on track. The reason I'm asking that is we did not take count of how many people are familiar with the CADIP processes that are currently going on. Okay. Can I assume that we are okay with this, or do we need to elaborate a little bit more so that we go into the next thing? Okay. Because the reason why we were sharing that, let me just explain a little bit. The reason why we are sharing that is because a lot of the investment planning in member states now are going to be aligned with the Kampala Declaration. And with the CADIP processes is once you have the declaration and you have the strategic action plan and you have the resource framework, then you are expected to develop the investment plan. And the link with what we are doing is that that investment plan, which now has moved. Initially, we used to have what we were calling National Agricultural Investment Plan. But since Kampala Declaration came and took effect early last year, we moved to a much wider perspective where we are now talking about agri-food systems approach. So this is why now you are seeing the reference being made to NASIP rather than NIPE, because now we are developing what we call National Agri-Food Systems Investment Plan, which encompasses all the facets or the areas in the agri-food system. Because of the realization that the agri-food system approach means there are different components. And these components have to work together in order to move the agri-food system ahead. This is the reason why we were sharing that. And then the other link with it is that what we are going to do now is really to focus on those constraints that we saw yesterday in terms of the presentation that we had and the interventions that we need to make. Basically, what we are trying to do is to transition now from just discussing issues to focusing on the solutions that we have. Okay? This is what we want to do now. Are we together up to this point? Yeah? Are we? Yes, if we are together, then we can proceed. Because what we want to do now is look at those constraints and then see the policy interventions that are required. Some of the policy interventions may already be in place, but they may not be sufficient. So we want to see if we can actually deal with them at this point in time. This is the essence of this particular session that we're having now. Okay. The way we are proposing to do this is to, can I request the IT people to project? Yeah, the next, okay. Yeah, move on. Okay, I can move it, yeah. Yes. This is the process that we have, and we had tried to categorize this. Remember yesterday when we had the presentation from Masiko, we had a number of policy issues that were indicated. So what we want to do now is really to focus on these levels and then see the kind of policy interventions that have been proposed or that are going on, and then develop some of the interventions that we need to have in order to advance the pastoral livestock development. I may just, refresh your memory a little bit if I can locate it. What this has done is just to put the issues together, okay? Because we're having the production issues, we're having market issues, we're having capacity development issues, and we're having investment and finance. So those are the categories that we're having as of now. And what we want to do now is to look at them systematically and see which kind of policy interventions may be necessary at this point in time, or the ones that we can propose that are not currently in place. Because a lot of the issues that we had, I think we had discussed them before. So I really did not want us to go back into discussing again the specific policy constraints, as it were, but just to take us from plenary, so that if we look at production and productivity, we look at which are the critical areas that need specific policy interventions that are currently not quite in place or are insufficient as of now. So I will want to open up for discussions so that we can make our contributions and then we can consolidate this. But also you are at liberty, because you know we are open here. You can also contribute in terms of the way, the approach that we are taking, whether we need to adjust it or whether we need to adapt a different format. Yeah. So can I invite contributions? Yes, I can see that corner. This corner. Yes. Yeah. Please proceed.
Okay, thank you very much. My name is Ben Mwongela. I'm director of a consulting firm called Agile Consulting, based in Nairobi and operating within the region. I would like to make my contribution, and thank you very much, Professor, for demonstrating how the pastoral market systems are basically getting domesticated at country level and basically all down to the investment cases and all that. And that's the point at which then I may want to address some of the policy constraints that, or some of the constraints that we've identified. And my question, and this has been lingering since yesterday, is when we talk about policy and look at all these things, we don't seem to mention in good detail the issues around political economy. It's very clear that the livestock pastoral market systems is developed, is commercially active, and now we are talking about investment cases. But the political issues are basically uneven across actors, across countries, across some of the things that we do. I may not dwell on issues around policy coherence, on issues around inactive policy implementation. But now that we are talking about this, then I would like just to focus some of these constraints from a political economy perspective. Because definitely you are not going to divorce the economic system at all from the political system. And we know that political economy issues affect how we comply, the pricing, investments. And if you focus on pastoral producers, for example, you know that when you look at the end-to-end of the commercial market chain, then you'll see that some actors may have more information than others. And what is that likely to do? That is likely to reduce the bargaining power who don't have that information. That information could be loosely translated to even include technology, funding, and stuff like that. When you talk about the real actors who are the off-takers right off the farm, you could be talking about middlemen, traders, who could be in different configuration, large scale. You could even call some of them brokers. And because of inability or laziness in terms of implementing policy measures, including some of the things that we picked from the Naivasha meeting, then you'll find that informality can be entrenched. And that leads to agri-food systems that basically may precipitate trade which is not good or bad food. Also, large traders could be colluding and shortchanging the bigger boys could be colluding and shortchanging the smaller boys and girls. And then also even access to issues like to facilities like infrastructure, cold chain, and all that could then be within the reach of certain members. And all this then starts taking us to a policy problem of political nature, whereby we see the interaction of the economic system and the political system. And I do not see within the list of the constraints that we've listed here and the discussion that we've had, issues around that political economy space. Because now we are talking about investment cases. The investments are going to be anchored within a political system, within a political economic system, whereby there are rules of the game and there are actors and there are coalitions, and they can skew how things are done. So let me stop there, and that's what I wanted to point out. Thank you.
Okay, so Ben is essentially adding the political economy. So you are increasing the list from production, market, capacity building, investment and finance. Now we have a political economy aspect. But we may, okay, let's take the questions and then we'll come back now to discuss that appropriately. Your hand was up there because there are hands there. I see here and at the back there. Oh, added. So let's go that way, then Madam, then here, and then at the back there. So please make your contribution in terms of the relationship to policy and legislation, as it were.
Okay. Thank you very much. I am Rachel Mkandawiri from FANAPAN, Food, Agriculture and Natural Resources Policy Analysis Network. My contribution is kind of like to summarize the policy priorities that you shared on the slide. I feel like when we reflect on what has been presented in the past few days, you see that there are spots of implementation within the pastoral livestock market that is happening in country. For example, we've seen Namibia, Botswana leading in traceability. We've also seen like a very good investment case, the demand being sufficient in Nigeria or West Africa to within like the domestic demand for meat and meat products. But I feel like what is missing could also be a knowledge management, a stronger knowledge management system could help to synthesize lessons from successful policy reforms, even on issues of trade corridors and market development initiative. If we have a stronger knowledge management system, it could help try to understand which countries are doing well and which countries are not doing well, and then how to support and implement that. And also, linking on the same, there when we talk about CADIP, one of the issues that come out strongly during the biannual review process is that countries are not. It's not like countries are not implementing, but it's not being reported. So, which really shows that a knowledge management section within policy implementation is missing, and is something that we really need to think about. Thank you.
Okay, we may have to interrogate that further so that we really narrow down on exactly what implications are for knowledge management. So as we take the other questions, please think about it. How can we focus exactly on the key element of the knowledge management system that is not allowing us to progress the way we should? I know those biannual review and so on, but we'll come back to that. Let me take the questions. Yeah. Okay.
Thank you so much. I come back and I maybe right on the point of my brother there from the far right on the actual value. Where is the actual value of these investments? And when I'm asking that, I've been asking myself, is this empowerment or abdication? Simply because, okay, he's talked about middlemen and the people taking up the market. What we know, and now allow me to be a little bit tough to the off-takers, we know that off-takers, you don't own the livestock. There's no livestock of your own right now, as opposed to the knowledge that I have right now. The pastoralists themselves own this livestock. They may decide to give you livestock, or they may decide not to sell to you the livestock. What happens then? What will be the conclusion of all this agenda? Because in Kenya, where I was, and I told you this previously, we had an agenda driven by the government, but it flopped because there was no government, there was no community communication or participation. Now, when the value, I come here. Now, let me, as I said, I be a little bit hard on the off-takers. You've met me at the ground, and the value of the livestock, you're saying, I had Dr. Otieno say, that is, they are buying a little bit higher than the price the pastoralists are getting from the market. We have to be very open to each other here. Right now, the measures and the figures and the amount of money that the off-takers, it's not even clear. All of them, 4 of them are here, each and every off-taker has his own figures and digits and how they are arriving to the initial, to the farm gate price of the pastoralist they are getting to. One of them is saying we do 9 to 10 kgs of 12 kgs of a lamb, and then they do by 250 Kenya shillings per kg. That translates to roughly 2,500 for a 10 kg lamb. And then someone says that we do 10 kgs of that lamb, then we do by 600 Kenya shillings, and then by the rate of a carcass weight, which is 0.4. That brings you a little bit lower by a shilling or by 100 shillings, Kenya shillings, of the price. And then I was in Kuwait last month. I was there. The amount of the price of steak, a lamb cut, was close to, if I'm not wrong, converting to dollars, $25 there per kg. That gives you, if you have a good calculator, to around 1,500 per lamb at UAE market. Then I'm asking myself, are we empowering this community? Where is the actual value of the livestock going to? The other thing is on the measure. I think he answered. The Strathmore University answered that the weights are from the market. The Chinese weights. Sorry to say that. Just readily available at the outlets, any outlet. They have not been interrogated by the government. Nothing has been done, calibrated. Every weight has a zero error. And I say this in respect of the money and the profit gotten by the off-taker, what we call the middlemen, because they are there between
Okay, just summarize, because we have a number of people also
Thank
waiting.
you.
Yeah, yeah,
So
yes, yeah.
just to summarize, I want to urge all of us, maybe in the next, perhaps, forum like this, let's get the right stakeholders. Let's get the pastoral communities, the owners of these livestock. They know what the market looks like and what they want from their livestock. The other thing is, I want to ask, maybe I don't know who will answer this, did they do a FPIC, a free prior informed consent on the market they've gone to these communities? Thank you.
Let me emphasize, here we would wish you to look at the constraint and propose the solution. From the issue that you have raised in terms of the pastoralists and whether they're getting the right value, what we need to know is what kind of policy solution can we get? Is it an issue of capacity building? Is it an issue of organizing, pastoralists organizing themselves into associations, into, groups, so that they can increase their, potential and so on? Because I know in the capacity building that we had there, we just included it under business skills. It is not very direct, but these are the kind of things that we want, because we need to come out of here with solutions. Yes, this is what we need to focus on. So please, let's focus on the issue and the proposed solution, so that we move out of here with solutions, and these solutions we can propose to the dignitaries that are coming tomorrow. This is what we want to do. Yes, please.
My name is Hassan Bashir of Nourishing Nomads from Kenya. If I start from where you ended, I think it's an issue of the policy and the public sector investment are not matching. Generally, I think, and yesterday we were hearing quite a lot of excellent presentations. We see the issue of regulatory and enabling environment almost always coming at the end. It's like when you have done everything else, then you talk about policy and enabling environment. And I think if one thing is shackling pastoral markets, it's environment. I'm a farmer, I'm an investor, I trade, I grow fodder and so on. And I see nice documents from the public sector in Kenya. And I never see the real investment at the farm level, at the village level, where really input is needed. I don't see public good investment that will be useful for farmers. I don't see vet work. I don't see, markets. I don't see things like that. So it's livestock pastoral markets are a very hard place to work with, especially for the private sector. If you think of it as an investment from the investment point of view, it's really, if you analyze your options, it's the last thing you want to put money in. It's much more easier to put money into a lot of other things, because the hurdles before you, if you are putting production, let's say in some rural place where the livestock is plenty, because that's where you need to put investment, the hurdles you go through discourage you. I mean, there's conspiracy of combination of things that prevent you from doing it. Roads are poor, communication is poor, water is poor, workers are not existing. Where is public sector investment in this? What is the use of nice documents that are on the shelf that are gathering dust, and then after a decade you change the name and you bring out another one? I think the key challenge, if this market has to be productive, and productive market requires scale investment. If scale has to come, investors have to see the factors that make work easier at the point of investment, and that is something that's lacking. So I will say, enabling environment should be something that we invest upfront, that encourage investors to invest, put money, build factories, create abattoirs, create feedlots, and so on. Some industries, for example, creative industries like tech and so on, can grow, and then regulation and enabling environment can follow. We have seen that happen in many parts in Africa. In pastoral markets, that cannot happen. The environment is difficult, it's harsh, it's rough, it's costly. The things that you have to do, you lose money before you see a return on investment. So that gap that requires so much public good investment, goodwill investment, public sector is needed there. Thank you.
I think, Rashid, you'd help us a little bit more if we focus on the real issues, and I know you are close to it, because you have said there are several factors, there are several constraints that you're facing, including infrastructure, roads, and so on, and such. I think our focus here is really, can we pin down what are these things that are bringing us down? Because there's, you're saying there's a mismatch between what the policy says and what the public investment is doing. That is the point we would wish to take, because it is not necessarily a policy issue per se, but it's an implementation issue that actually brings us down. That if we are going to do roads, infrastructure as it is, can we do infrastructure that supports pastoral livestock market development? I think this is the point that I'm getting from you, so that now we get something that is concrete, so that when we present this to the dignitaries, we are not just complaining. We are proposing that put the money where it is required. Are we in agreement on this one? Yes, this is what we want to do. So as you make your contributions, let's take that direction as well. So please, there. I'll come back in the next round, yeah.
Okay, thank you. Thank you. My name is Mealam Shtay from the Luna Export Slaughterhouse based in Ethiopia. Really, it's very interesting thing that we are discussing about the pastoral developments. But I think we should take care of looking or understanding as if all the pastoral community in the Africa are homogeneous. I think they are heterogeneous. First and foremost, we have to understand that they are heterogeneous by their socio-culture, socio-economic, you name it. So when we craft any policy, we have to take into account this heterogeneity. The second point, pastoral community are very rich in indigenous knowledge. Indigenous knowledge in early warning, in livestock husbandry, in animal disease prevention. They have their own traditional knowledge or indigenous knowledge, and I don't see the possibility of entertaining or including this indigenous knowledge. I heard some points over there about the knowledge management. I think it can go together with that. Indigenous knowledge should not be overlooked. The other point in the first, the second bullet is mentioned that low production and productivity, land tenure, feed and fodder. But there are areas which are growing feed crops apart from feed and fodder. Also, we should also consider in areas where there is opportunistic farming, like agropastoralism. That's why we should consider their heterogeneity and agroecological differences. Where there is agropastoralism, there is a possibility of crop production apart from feed and fodder. So we have to consider that one. Along this, I think genetics is included. I don't know whether it includes the research. The research is very critical in that area because low production is low and productivity is at the same time low. So we can improve through diversified research thematic areas. The other point when you talk about agriculture in the pastoral area, water is number one. So any development in the any pastoral development should be embarked on water development. Otherwise, we cannot talk about production and productivity. So I don't see issues that touch the water development issues. The other point, when you talk about pastoral development, we should not only focus on agricultural activities to sustain their livelihood. There are opportunities apart from agriculture, non-agricultural livelihood mechanisms, where to indicate, where to address these income generating activities. I think at the end of the day, we are looking for to improve their livelihood. If that is the case, we should consider non-agricultural livelihood diversifications. Thank you.
Yeah, okay, thank you for that. I think let's be open about this one. It's not just me responding, so I will want us to be giving responses as we proceed, how we can actually, elevate the issues that we are discussing. Some of them are very, very pertinent, and we need to look at them. I was on this table here first. Yeah, let me go with Tahira, and then at the back there, then Tito. Then I will come this side, okay? I will come to Jean-Marc here and Faisal. Then I will go, okay, let's take this down. Those people in the middle there, I will come to you after we have finished this one. Okay.
Yeah, thank you so much. My name is Tahira Mohammed. For me, I want to focus on three things, especially building on what Hassan Bashir said. Is on number one, is the regulatory environment. For example, let me give a case in Kenya. We have county governance structure, whereby you're in Isolo County and then you move your good from Isolo through Meru to town. So like how many levies do you have to pay for you to move just a small amount of milk? You have to pay all these levies. How can, within the countries itself, these regulatory bodies can be reduced so that the farmers, the pastoralists can have value for what they produce. The second thing is about the infrastructure. I think one of the policies that need to be given attention is how to incentivize public institution or even like big project like Drive to invest in infrastructure. You know, having cooperatives and supporting, doing all this stuff is okay, but then what is our legacy? So government should incentivize like big project, big investment to provide infrastructure like footprint when they leave, because big projects came and ended. Regional projects, what did they live with? Like pastoralists have been left the same way they were found. They're still struggling doing the things the way they're doing because these infrastructures were not given a priority. And so policy should be really incentivizing this big project to do that. And then another thing is about accountability. Let me give you an example also from Kenya. That's where I come from. Isiolo Abattoir was started in 2007, and now we are going to 2027. It was started then. 20 years down the line, it is not operational. Why is that the case? Why even the communities themselves are not making the government accountable? And I think these huge investments should make national governments and also regional bodies to be accountable in any case where big investments are promised. And then finally, in one of the things that can also cushion pastoral is linking to what Jacob said is cooperative model for pastoral area. That thing has been said many years ago, early 1970s. The model could work, but if it's only adapted in pastoral settings. And I think policy should support these critical issues, because at the end of the day, we want the pastoralists, the producers who endure the hardship, who really need to get the value for the animals, be supported and really linked to the market that we are talking about. Thank you.
Can I continue? The same table. Yes, yeah, proceed, and then we'll come to Tito here, and then we'll come this other side.
Okay, thank you. The issues I'm going to raise has been discussed.
Please introduce yourself as you.
Okay, sorry. My name is Bashiru Musa Demsa. I'm now retired. I'm based in Yaoundé, Cameroon. I used to be the main focal point of AU-IBA at the ECAS level in Central Africa, the Economic Community of Central African State. So I think for me, if we merge this project, APMD, to the CADEP process, we might be, I'm not going to say that we might be wrong, but we will not be in a right path. Why? Because CADEP is a comprehensive package, and livestock is just a part of it. And when people went to Kampala, the process went even deeper. It linked more agriculture, livestock, fisheries, and everything. So the CADEP, the APMD project cannot spearhead the CADEP process. It's not very feasible. For me, it's better that at AU-IBA level, there will be proper fund for the institution
in Africa. And the first issue is
finance. And my question to us is, do we have all the stakeholders in the room? We've talked about all the public infrastructure investments that are required in this space, but is there somebody from, other discussions that we had earlier? One of the things that came out strongly is the need for transparency and visibility of the flows within different businesses in that ecosystem. And a key lever for that is digital finance or mobile money, whatever you'd want to call it. How can mobile money, whatever you'd want to call it, how can we enable more digital finance solutions to be uptaken and used by pastoralists? I think we need to incentivize, for example, telcos to invest within those areas and improve network coverage. Then we need to have data privacy being really being data privacy rules being adhered to by the government, so that people do not feel exposed when they are transacting on mobile money. And finally, we also, we talk about lending to pastoralists and
the cross-border markets. Who develops these markets? Very rarely do government even look at it. The structure is poor. We don't have any formalization of these markets. No effort is being put to fix these markets. So these are some of the measures. Another very, very important thing is that Also, the capacity of border agencies and security agencies, even some justices in the member states, to be able to manage conflicts, conflict prevention and controls. Some of them don't have the capacity to train border agencies or law enforcement agencies on basics.
Especially the French speaking there.
The key challenges that we face is not starting from pastoral governance and leadership, because there's communities and there are cooperative and community institutions, and participate in policy discussion and dialogue. I think learning from them would
a very big opportunity for us. Thanks.
And then the other point I wanted to raise is that
I want to go, is it Chad behind there? Chad? Yeah, please proceed.
Merci, Monsieur le modérateur. Je pense qu'on est en train de reprendre les mêmes problèmes qui ont été identifiés déjà. Avant l'élaboration du plan de développement durable de l'agriculture en Afrique, le PDDA, on a fait une déclaration à Maputo en 2003, Pastoral, en commençant par les points d'eau. Je pense qu'à ce niveau-là, si on peut déjà réfléchir sur des programmes, des projets régionaux, et il est prévu déjà dans ce cadre de Kampala des revues qui continuent. Alors, je pense que c'est ce que je peux peut-être faire comme proposition. Il faut peut-être aider donc les pays et surtout au niveau communauté économique régionale qu'elles interviennent pour aider donc les autres à mettre en œuvre les politiques communes qu'on va retenir. Merci.
Okay, thank you for that. But this is why we are here. We need to evaluate ourselves and see where we are going in terms of these processes. The emphasis and the fact that we have been talking about this will not prevent us from emphasizing the fact that there are still a constraint and
issues. I think when you're talking about the pastoralism, policies should be able to capture strongly issues around securing community land. Of late, the community land is kind of a threat from...
This is a policy issue. It must be picked up quickly. Another key area on policy is on those investments that go along those corridors, like the quarantine facilities. Which side of the border will they be? There are two countries. Will they be in country A? Will they be in country B? Or are they shared facilities? There are policy issues with regard to non-tariff barriers that are necessary, just roadblocks, things that, and on traceability and on logistics. And lastly, I need policy issues when it comes to standards, what we call the admissibility things. When the animals are sick in one country, they have foot and mouth disease, will they just cross?
What I would say as a solution to addressing that issue around policy coherence is to ensure that as we when trading our products, so they are not